Africa's fintech space is growing rapidly, consistently receiving the highest amount of investment, with more and more players emerging. Fintech companies dominate the tech ecosystem in Africa, with Nigeria alone leading the pack as a home to over 200 fintech startups. But over the years, there has been an ever-growing need for digitalization of financial transactions, and it is the increasing payment sector that leads fintech operations on the continent. Prominent in Africa's payment space is Cellulant, a payment service provider with an active presence in over 14 African countries, including Nigeria, Kenya, and Egypt. Where Cellulant digitizes financial services for SMEs and large corporations through its multi-channel online-offline payment platform thingy. Despite the exponential growth of the sector, there is no doubt that the industry is fraught with its own challenges, and the big question is that in what way is Cellulant trying to solve this problem? Of course, joining me live in the studio, well, to answer these questions and of course explain more to us is the acting chief executive officer of Cellulant Nigeria, Mrs. Sike Bamisebi. Good afternoon. It's good to see you on the show.
Good afternoon, Tolu. Thanks for having me.
Yes, like I said in my introduction, a lot of entrants into this space. I'd like to start that. What are you really doing, or what do you think you want to do to fill in this gap from fragmentation to reconciliation and settlement challenges?
Indeed, you're correct. There's a lot of fragmentation in the fintech ecosystem in Africa. If you look at Kenya as an example, so there's M-Pesa as a payment channel, and it works. You come to Western Africa, in Nigeria, you see the prevalent of cards, bank transfer. You go to, say, Zambia, you see Momo. It's the ability, actually, of payment companies to bring together all these payment channels into a platform whereby, businesses can, with one click, integrate into the platform and then deliver to their end customers. So you don't have to worry about, for instance, if you're a business, you're a global business, you want to set up in multiple countries across Africa, you don't have to engage different payment companies, you don't have to enter into multiple contracts to do this. As Cellulant, we're present in about 18 countries. We currently do business in 35 countries in Africa. So with one integration into us, you can connect to our platform and then make yourself available from day one, regardless of whatever country you find yourself in Africa. So really, if you will, we are helping businesses to scale and to be able to collect payments from their end customers from day one.
That's a very good way to start this conversation. But with the increasing adoption of digital payments, smoother user experience is something that is very key. How do we begin to synchronize multiple payment channels more seamlessly on that one portal?
And consumers they're wanting more.
Yes, of course.
Seamless experience from fintechs. So if I want to complete a transaction, say I want to make a payment, I want to do like a click or two and be able to complete a transaction. In fact, not having that seamless or smooth user experience, not able to create that, actually might make a difference between whether a business is able to complete a sale or not. And with that, I think it's very critical that for payment companies, we make it as seamless as possible, that whatever payment method we deploy, number one is the availability of the payment method. So I need to be able to go on a platform. If it's card, I need to be able to use card. When my card doesn't work, I need to be able to use bank transfer. If that doesn't work, I need to be able to use USSD. And that is what it's very important that the digital payment companies are able to combine all this into one single seamless experience to be able to deliver to the end consumer.
Let's now look at robust fraud detection mechanism. How do we make sure that we protect customer data in all of this?
So, there are different data protection laws, regulation for different jurisdictions. So if you take an example of Europe, we have the GDPR. In Nigeria, there was a data protection law enacted in 2019, which is the NDPR, that's the Nigerian Data Protection Regulation, that was enacted in 2019. What this law does is that it protects Nigerians, it doesn't matter where you live, whether home or abroad, from, it protects your data, how we use the data of Nigerians. So if we take, in the instance of Nigeria as an example, we've been able to build a robust system, a robust process internally to be able to manage, the data of our end consumers, meaning that we are there to the pillars as provided for in the regulation, in the lawfulness, transparency of data, how we keep this data, how we share this data, whether or not the end consumer actually know what we're using their data for. And we've been able to build a robust system that ensures that even though we collect data from our customers, the data is safe, is secure, and you don't have to worry about whether or not we're using your data for something unlawful.
Great stuff there. Now, a new wave of transition in the global world, digital currencies and all of this. What sort of interface do you see this playing with, digital payment solutions? Do you see any? Are we working hand in hand? Is anything being done to synergize all of this?
Yes, but before I get to that, I think first we need to evaluate what actually the benefits are for having a CBDC, which is the central bank digital currency.
Yeah, that's what we expect. Okay, fourth. I think that's today. Today should be launched today.
So if you look at the instance of Bahamas, they've launched theirs, which is the standard dollar, and if you look at just that use case for Bahamas, and then compare with the use case that the CBN is trying to push, what does it really do? It's an additional store of value in the ecosystem, meaning that today we have cards, we have bank transfer, then we can also add an additional store of value, which is e-Naira. E-Naira being that it's cash in the wallet, because it's just a replica of the cash we have in the ecosystem. It's just that this time, it's in the wallet. So it then provides an opportunity for the otherwise financially excluded to be able to start to transact and start creating footprint in the financial ecosystem. So that's number one. Number two is that it also eliminates, the bottlenecks, settlement bottlenecks that we have today, because this is indeed the central bank central bank currency. The liability is directly on central bank. Because it adds to it's an additional payment channel to what we have today. It means that we, as Cellulant, we continue to be integral to putting all these payment channels and putting them on a platform that it easily, you as an end consumer, you can go on a platform and choose to pay with your e-wallet, with your e-Naira, and we make that available. And, at the background of that is, a digital payment company like ours.
Great stuff. Let's now look at the future of product partnership and corporate entities, of course, commercial banks to ensure or enable digital collections and lending for corporate customers. What are you forecasting? What do you think would happen around that space?
Okay, so I think we live in a world of collaboration.
Sure.
So it's not so much about competition, but actually collaborate to be able to deliver to the end consumer. So today, no payment company can have everything, So if you have collection, do you have lending? If you don't have lending and you have to deliver almost like a turnkey product to your customer, then you need to collaborate with another fintech that has lending. If you have a global merchant that want you to, so let's say we do business out of 35 countries, but there's a global merchant that is present in 50. I want to go with, or maybe it's a single contract, so you don't want to go into all your 50 countries and then start, making new relationships. And then you don't want to do 35 with Cellulant and then do 15 with another fintech. What you then do is that you give Cellulant one single contract. We then need to collaborate with aggregators. We need to collaborate with banks to be able to deliver to the end customer. That is on one hand. Another angle to it is that today the infrastructure that is used by fintech is actually predominantly provided by the bank.
By the banks,
yeah. So you collaborate with banks in terms of infrastructure, you collaborate with banks in terms of payment methods, you collaborate with MNOs, you know, for payment mobile money, yeah, for mobile network operators, also for their own payment methods. So that's where I see that the collaboration is very important, and you know, no single digital payment company can actually do it alone.
Now, financial inclusion is key. We've been talking about this for years, setting targets and all of that. We see the central bank looking for all ways to meet up. Now, what in your view is or are the impediments to achieving the set targets, both Nigeria and of course across the continent?
So today, according to the World Bank, we have about 1.7 billion people without formal form of ID identification. So what that means is that they can't access, you know, regulated financial services because of course, KYC issues. Yeah. And that issue is with us here in Nigeria today. Yeah. If you look at what we stand for, we're actually pioneers, you know, in agency banking, and we're a great proponent of financial inclusion in Nigeria. Today, we have an agent network in 34 out of the 36 countries, 36 states rather, in Nigeria, and we enable customers in remote areas to be able to access simple, you know, financial services, begin to build footprint, yeah, begin to have data that they can use to consume, you know, other financial services down the line. So that is on one hand. On another hand is actually an angle of, you know, someone that is underbanked. So, for instance, if I am underbanked and I have 50,000 in my bank account, yeah, I go across the till, withdraw 10,000 naira, then I take the cash to go and pay for my bills. So, I buy my electricity, I even pay my rent from that card. What I've done is that if you look at my bank account, I only have 10,000 withdrawal. That's not usable data. What did I buy? What's my spending habits? You don't know, yeah? So what we've done is to actually introduce a product where, with your mobile phone, you can still have the cash in your bank account, still go to your corner shop, buy your groceries from the same phone, pay for other things. What that then does is that you then start to build credible data that will enable you to build you know, that footprint financially, and you can consume more data, and so that at the end of the day, it's not just about financial inclusion, but there's economic empowerment as well.
On the line. I'm also thinking about the role your product Tingy play, or tell us about that. What will it bring about significant improvement in financial inclusion? Talking about your own products.
So we have the online and the offline products, but I'll just talk about the offline products.
Okay, please.
If you look at what we've been able to come up with. So today, if I'm in Kenya, I only need my phone to complete a transaction. So I'm going to the supermarket, I only need my phone in my pocket.
Wow. In
Nigeria today, I need my wallet. So with my cards and also cash for backup in case my card doesn't work. So what we're trying to do today is actually to have, you know, we now have a product where with your phone, you can enter a store, yeah, and then you can complete transaction from your phone. You don't need as long as you have money in your bank account, you can complete a transaction as an end customer.
Before I go to my last question, which is about regulatory ecosystem in the country, what other challenges, aside infrastructure, which I know is one key challenge for fintech players in the fintech space like yourself, what more are the challenges, or what more do you think can make your job easier, or the service you deliver easier to the people?
So I think if you look at the fintech space itself, it's relatively new.
Yeah, it is.
So there's a lot of, you know, changes that need to happen in consumer behavior. Number one, consumers want to be comfortable that their data is protected. So if I go on that website and I use my card, you know, how safe is it? Yeah. we need to build that culture. We need to tell them, we need to assure them and reassure them, you know, that it's actually very safe for you to go online and, you know, pay, and then your payment will be completed. Your data is safe, your information is safe. Another thing is probably in the area of, you know, cyber security, which of course we ourselves have robust processes around this, you know, to ensure that while you're transacting online, you know, you're not exposed to fraud. You know, we have a platform that is protected from any of this.
So let's now look at regulatory ecosystem in the country. How would you rate them? What's your assessment? How enabling are they making your business? How easy are they making your business? You run your business.
Okay. So I'm just so if we look at Africa today, I think the central banks, to be honest, have made a lot of progress. Don't forget that fintech itself, it's new. Yeah. True. But we're into financial services, meaning that it has to be regulated. It has to be regulated from the point of view that, you know, money is moving around, and we need to ensure that, you know, for customers, they don't lose money, they're trading safely as well. So the central banks across Africa have made a lot of progress in ensuring that they bring sanity end to end to how we operate in the digital payment ecosystem. The CBN too has made significant progress in ensuring that today, it's regulated to the point that, you know, if we look at the licenses, there's tiering. Yeah. So if you don't have this capital, with this much capital, you can't do this type of. So they've used like a risk-based approach to ensure that only the fintechs with appetite can carry out certain transactions. That said, there's need for improvement in the area of collaboration because it's a new space. We also want to a situation where we collaborate more with the central bank to ensure that, you know, we actually come up with a regulatory framework that does not hamper innovation and, you know, also at the same time protects, you know, our citizens, you know, and ensure that they trade safely.
So would that be your proposal in terms of policies for the industry to be better regulated? Yeah. Or you have more?
Yeah, so I think it's all from the way of collaboration. So what are we driving? We're driving innovation. Yeah. So whatever I'm getting from my regulator should not hamper my innovation. Yeah. So we continue to collaborate to understand, okay, so, you know, these are the things, even in terms of rolling out products, you know, before we roll out a product, we should look for ways where we collaborate with the regulators. So this product is coming out, what are the risks that you see? What are the things that we should put in place? I think with strong collaboration, we'll be able to come up with something that is well desired.
Very beautiful to have you on the show. A brilliant response to my questions. I'll be speaking to Acting Chief Executive Officer of Cellulant Nigeria. She's Mrs. Sike Bamisebi. Thank you very much for spending your afternoon with us on Business Nigeria. It's your first time on the show, and we really appreciate this.
Thank you so much, Todd.